So good afternoon guys, or morning depending where you're watching at. So this is my first trade today. Nice, around 4:44 Eastern time, and just got into trade. First trade I took this one, it retraced back. I added 2 contracts in. The reason why I got in this market, I want to explain, is that you can see the market driven had a bullish delivery here. This is a bullish delivery. We took this basal liquidity to short-term high, and then this favorable gap. This green rectangle is a favorable gap. You can just see how bodies respected that favorable gap. The bodies closed below. The wicks get into that favorable gap, but the bodies stayed below it. So with that, there was a displacement of this swing low. Remember, this swing low is the one that went driven market to take this short-term high. So this one is an order block. This one are an order block. Expecting market now to go down to this sensor liquidity, this short-term low, this sensor liquidity here, and I don't know if the market will reach here, but let's see how market today will go. There's a volume imbalance here. I expect that one to remain open. I expect this one to be balanced price range here, because this side offered, this side offered. So these short-term hollow have been taken as well. So I expect market to start going to this, taking this short-term loss. And if you check GPSD, it have not taken this short-term low. You can see this low is lower than this low. And when you come to EURUSD, the same low is higher than this low. That's what we call a SMT divergency. That one is taken, and then if you come to GPSD, yeah, it have not been taken. So that means EURUSD is more bearish than cable or GPSD. So here I'm expecting a more bearish move as compared to cables or GPSD. This one will start before market reach here. I think this loss to be taken in EURUSD. We expect this low to be taken here. So this is at least a good move. At the moment this low will be taken, I'll take my stop loss. First of all, I'll take my first 2 contracts out, and then this the 3 contracts I place the stop loss at the break even. But we don't know what market is going to offer, so I'm just waiting to see what's going to happen. Let me look at gold. There's a short-term low taken, shift to market structure, retracement into position going. So I expect this high to be taken. This is a new day opening gap. That one, and then the same. So this one is the new day opening gap. The same as new day opening gap is the same level with this new week opening gap low. So I expect market to come, use that new day opening gap levels, and then continue to go gravitate the price towards this basal liquidity, which is new week opening gap cause encroachment, or the midpoint of between this low and this high of this new week opening gap. So I expect market to come and use those levels as we gravitate toward the price higher. because there are basal liquidity here. You can see this basal liquidity are smooth. We have been so bearish. There are two equal lows here. There are two equal lows here. Remember, you have news this week. I think, yeah, on Thursday, 8:30. You have news on Thursday, 8:30, at around 8:30. Let me go and check. The moment the market will take, let me remove this one. The moment the market will take this low, expect big moves towards this excess liquidity so that the price can go and attack this excess liquidity. I'm waiting for this short-term low to be taken first now, and then we go and attack this excess liquidity. This excess liquidity to be taken. These are combined $50. These are clean setup, of which sometimes you have to have a bias first before you get a model. If you get a bias, everything will be okay. So when the first target will be hit, so expect market now to take this short-term low at the moment, and then we see if we're going to take this excess liquidity. This is a live trade. Let's check out the calendar. A symbol model targeting the excess liquidity. Those excess liquidity after the short-term low high taken, short-term high taken. So we're targeting these short-term lows here. That's the next target. Went into this trade with 5 contracts. I'll take first partial here, first 2 contracts here, and then I'll see if the rest will run out till here after placing my stop loss at the break even. So this week, by the way, we have news on Thursday. Average hourly earnings, non-farm employment change, unemployment change, unemployment rate. I mean, those will be around 8:30 Eastern time. This time distortion. Now we're in last hour macro that I do trade. So I expect this macro to start using the market used this macro, I mean, to go bearish. I don't expect this high to be taken again, so I expect market to start taking this low to be taken. There's immediate rebalance there, a good one. If the market can retrace to this cost encroachment of this previous week, start using it to go this liquidity, that would be a good one. But as well, it can just go to this liquidity. A clean model. Balanced price range. I expect this one to be balanced price range. You can see we have used this new day opening gap low. We are about to reach the new day opening gap. I said the new day opening gap high is the same level this new week opening gap low, because you can just see here it's around here, so that's within the same level. At the moment it use that this PDRA, I expect market now gravitate towards the low, use the low of this new week opening gap low to the consequence of new week opening gap to the high. So that's what I expect. Short-term low taken. This swing low have been taken. So I expect a good displacement of price. A good displacement. This swing high should not be taken after taking this swing low. Taking this short-term high will mean market can come retrace back here. So I don't expect market to come back here. I expect now market to attack these liquidities, sell liquidities. So times distortion, but I don't know why market is doing that during macro time. However, it's still gravitating towards bearish, so I'm still okay. I love this 3-minute candle to close below this one, the previous 3-minute candle, to show me the bearish move. want to watch how market's going to behave on this week, this 351 week candle week. Touch to the low quadrant of that week, of this week, 451 week, and the left. That's a good one. I've come back. Should close below this low quadrant. That should be a good one for me. Closed above, so I don't expect market now to use this conclusion of this week to go high. The market have touched the upper quadrant of this week. Market have gone past that week. I want to see how it's going to react on that. I've seen what market have come to use this volume balance that is here. That's the reason market came back. This one and this one. That's the target market. Why market came back? Because you can read here. Let me just remove these quadrant levels here. You can read the closing of this one. This is an opening. O means opening, H means high, L means low, and this one means close. So if you read C of this one means 159.32, and the high of this one is 159.10. Not open, no, not close. This is the opening. Sorry, because this is a bullish candle, so this is the opening. Openings 159. Openings here 159.10, and the high of this one is 159.10 to the dot, and then the market left immediately. It came to the volume imbalance. That's why. So if you get 1 minute, you get a setup. See here. Market came to that volume balance, displaced low immediately. There's always a reason why market's doing shady things like this one. This one was on dot, because you can check this, the high, this volume imbalance, 3 minutes candle, EURUSD. The opening of that one was the opening of that candle was 159.10. The high of this candle was 159.10 on dot. Market displaced immediately. It have come to retrace back. I don't expect it to come back here again. I expect now market just to play within this range, because this low have been displaced by the body now. This low have been displaced with the body of this candle of 5. So what I expect is the market just to play within this range and then displace lower. Remember, this one can be an order block proportion, so I don't expect market to come back here. This high took this short-term high here, displaced lower, coming to this volume imbalance. Volume imbalance, that was an end position, by the way. Now we continue to go lower to displace. Market should be going to those excess liquidity that are below there, those excess liquidity and the others that are below here. So I want to use this quadrant of this week. Of this candle week. I want to use it. Market have come to the encroachment here. Just passed with the 100 or 2, and then I expect it to displace lower now, to come below here. Let me check 1 minute. You can see how body played with that encroachment of 3 minutes. The body are below. The bodies of these two candles are below it. So that's a good sign. These are volatile markets. What I don't expect is the market to close above this black and this black line. To close above. think the market have retraced enough. Now, so I now expect bearish delivery from here. The market is so volatile, so now it should close below here and then continue going down. Now if it come back here, I'll close the trade, if just in case it come back this high. It have done enough retracement, so just in case it come back here, I'll close my 2 positions, because I don't like to be in such market. Yet I can wait for a good setup. Just a minute, guys. So guys, I'm just expecting the market to go on. So guys, I expect the market to continue going this low, take this this short-term low. After some retracement, now it's time for the market to continue going down. So I expect market iendelee kwenda chini and endelea kufanya nini, endelea kuchukua hizi excess liquidity. retracement to this favorable gap here with this quadrant level of that week. Let me move it because the market, I don't expect market to go back there. So tunaendelea, tuko fiti bado, ski sasa nimerisk $16 because this 12 plus 4 16, it have come from 50. That's a good stop loss management. I guess make sure mna subscribe na hizo vitu zingine zenye mnafanya fun. Hizo vitu zote make sure mnafanya hizo vitu zingine after subscribing, hizo za kulike, comment, share. Market ishachukua hapa, ndachukua stop loss zangu nika hapa chini hii 2 contrast enter position hapo. Hii law imeshachukuliwa, this law have been taken there. I want a body to close below it for you to confirm me that atarudi uko juu. To display sasa hii nataka hii candle, if possible this candle to be a very good displacement. A good displacement like that. So I will expect this cycle to be taken. Let me explain for you this one. A good displacement here. So we have had a very good displacement here. Now I am capable to place my stop loss here. So I have risk negative 2 plus 1, those are negative 3. And this 15 plus 15, $30, but I'm not focusing on that. I'm focusing to take this first partial out, first trade out. You can see it's just 0.4 that have been taken, I think. This is 18.60, this 19 point something. So I expect this SSI liquidity to be taken with a good displacement. This SSI liquidity just 0.6 to have been taken. Now I've taken 19.8 profit. I'm capable to put my stop loss just above here, just below that entry position. Now that's a +2. Now I can leave the trade to run, the remaining part of this trade to run. Remember, this was just a good setup. First end position was this one, that remaining. Second, after retracement here, good retracement to that volume imbalance. You can see this was a good retracement to that volume imbalance. 3 minutes. It was at the point exactly, because if you see the opening of that candle is 959.159.10 now, and the high of this candle that retraced that volume imbalance, the high is 159.10 exactly at the point. So now what I'm expecting is it can retrace now. The market can retrace back, but I've already got my portion out. So I'll check 1 minute time frame. I expect a second distribution setup here. You know this green candle, here. I don't expect market to come past that one. I expect market to play just within this fair value gap. Market is allowed to come back here, but not past this candle. So my stop loss is okay. But it would be amazing if the market just leave this fair value gaps open, zikuwe breakaway. But anyway, my second target ni huku chini, of which siko sure if the market will reach there. Let me look for another short-term low, maybe into 10 contracts. This one will make sense. This one will make sense for me. Guys, just 1 minute. So guys, I expect market to use this favorable gap. This one should be a breakaway gap. Breakaway gap. This one should be a breakaway gap, where a breakaway gap should remain unfilled that way. This one is a favorable gap. It can be it's not a second distribution because there's no short-term high taken here. So I expect this candle to touch the low of that favorable gap. You can see this candle just touch that conclusion of that favorable gap. Ilipita tu kidogo. Now I expect now the low to be touched by this candle, and then endelee kwenda chini. It continue to go down to this level. Remember, we have already paid ourselves with the 2 contracts there. So I expect this candle to be black until here. This is an empty position. Suppose just place above here, because market is allowed to come here, but what I'm expecting is this one to be a breakaway gap. Though market is allowed to come back here. That's why I've placed my stop loss this candle high. It was I had placed stop loss here, but now nimerudisha juu hapo. But always make sure you journal your trades. So always make sure you journal your trades. I've been journaling my trades because I first entry position was here, this one for 12, the second was here, the moment market come to retrace back here. So I've journaled my first entry position. I've written reason why I entered the market, the time, market pair, the amount of profit that I've gained, and which type of trade was that. It was a sell. And then I've taken the pictures of that trade. The candles have just closed at the conclusion of that fair value gap. This 3 means, but this 5 means fair value gap. The body is just closed below. The moment the candle will close above this fair value gap, I just get out from the market now. Anytime I feel confusion, I always come back to the time frame that made me to get into market, the model. So it was 3 minutes. Since the P that are still being respected, I'm still okay. 5 minutes, this was a period for 5 minutes. I don't expect this 5 minutes candle to close above here, the body to close above this fair value gap. That would mean that I should get away from the market. Most of the time I don't focus about how much I'm making. It's about if the people that are respecting my model. Are the people that are being respected as my are my people that are being respected, I mean. Guys, mnielewe, hiyo ndio nimeanza YouTube, so mnielewe nikistama mahali kitu kama hiyo. Mnielewe. That's what I want to see. Even ikienda juu hivyo, just the high of this fair gap, sina shida. The issue ni the body should not close above this conclusion of this fair gap. So that's a good one. Now if the market displays to this sensor liquidity, this swing low will be a good one for me. Guys, kiasi tunakam. Guys, so you can see here market imeamua kurudi juu. By that alone, I'm waiting for this candle to close to see bado kama it close above. The moment it close above this cost encroachment, I'm out. By that I mean this stop loss should be above here, because just if itafungia above this cost encroachment or the midpoint of this favorable gap, that alone means that I will want it to come back here, because I expect this one to be a bearish market. So for the fact that I expect this to be a bearish market, I expect equal breakaway gap. This is a good example, this is a good show that bado tuko kwa market. So even nikiacha stop loss yangu hapa, there I'm okay. Now for the fact the market may close below the favorable gap, maybe I just expect it to come back, touch the low of this favorable gap to continue going down. guys, I'm going to close these trades from here. I'll do a recap for this trade later, because I think it's taking time. This time distortion, you can see 614, some minutes to 7, which is New York opening, and by that market inafanya distortion to hapa, but at the end of the day itaenda huku chini. My stop loss will remain here. Ikuja ichukue, isipochukua it's okay, as long as it's pite above this favorable gap, of which nimeipea allowance ya mpaka to this high of this candle. So I'm going to close this trader now, and we meet next time, guys. Thank you for watching. Please consider subscribe, like, share and comment.